the broker, I'm buddies with the guy that owns the brokerage, and I'm like, hey, I'm gonna be making the offer with your broker. He's like, just put a good word in for me. So he called the guy. He's like, hey, is Elliot good for this? And he's like, yeah, he's good. And I'm thinking, like, dude, this is like 10x the size of anything I've done.
Yeah. Yeah. You're like, just fake it till you make it, man. Let's go.
What's going on, everybody? We got Jared Holland here from JH1 Homes. He's a Seattle mega investor. I met him at a mastermind down in San Diego. Crazy mastermind, by the way. The guy that was putting it on ended up not showing up or leaving his room the whole time. So I'm not going to say why if he's listening to this, but then we ended up doing it. And it ended up being fun because we made good friends, and I made friends with Jared. But I'm excited to get you on the show. I've been asking you for like a year now since I started this. You've just been too busy closing deals. So what's up, dude?
No. I've been eagerly waiting to come on. So I'm glad we finally made it happen. You've just had so many other big deals on here. It's finally my turn.
Whatever. So why don't you tell everybody a little bit about who you are, what you're doing right now, and then kind of where you came from, and then we'll get into it.
Yeah, absolutely. So, quick background. I got into real estate back in 2014 was the first time I ever even kind of found real estate as a thing. Before that, I was in construction. So I did commercial construction for about 5 years, worked in a specialty trade, boots on the ground in big buildings like Amazon, Microsoft, hospitals, that kind of thing. When I transitioned from that, I switched over into residential house painting. And I did that for 2 years, another kind of transition, trying to figure out what I wanted to do. Then I found real estate. At that
was
time,
that the college painting thing that you crushed it at?
yes, yep. So college pro painters, yeah, and I did crush it. So
Yeah. Why you talk about that real quick? Because everybody sees these signs like make money painting, college pro painters, get your house painted. And it's like supposed to be a summer gig, right?
it is. And honestly, so for me, I'm glad you actually pointed out, because for me, it was something that was a perfect transition into real estate because I'd never done anything really residential before. And College Pro Painters is actually like business in a box. I think they've shut down now, I believe, but it was really just geared towards like younger entrepreneurs, people who would want to start their own business. And it was a perfect segue into this industry because I went from working really, really big buildings to then into a kind of a much smaller niche thing, right? Residential house painting. And it just gave you all the steps of how to run this business, right? It was a lot of boots on the ground guerrilla marketing where you're out knocking on doors and sending out letters and really networking to get business. And it taught me how to be aggressive early on. So it was a lot of long hours, and it was kind of a perfect shoe-in for me because I had a good amount of experience. And I'm the type of person, just tell me what to do.
Yeah.
So
I'll go do it. That's why I think we hit it off, because we're the same. I'm stupid enough. Just tell me what to do. I'll go do it.
Yeah.
I won't ask questions.
Yeah. And if you see other people, they know how to do it, then it's, learning from other people's mistakes. So it was just one of those things that it translated perfectly. And it taught me how to write estimates on houses pretty quickly for painting, run small crews. And then, and that's when I found real estate, just painting people's houses. And so it was a really good transition into this industry. And then after my first year, I heard these radio ads to, flip houses, and you can do it in no money down in 3 days, blah, blah, whatever, the little hooks that they get you on. And then I went to the seminar. I ended up doubling down on myself, spent more money on this program than, I'd ever had in my life at one time. And again,
this program, Fortune Builders, right?
It was Fortune Builders. Yeah.
And you said you really liked it.
Yeah, so it's Fortune Builders. And for me, because I didn't have a network for real estate yet, and I wasn't really sure, I knew what it was, obviously, but like not the investing side. And it was another business in a box type of thing, like a franchise, right? So it was just tell me what to do and I'll do it. And so, I did this course, and I would say it excelled my career in a massive way because I'm that type of person that just show me the way and I'll do it. So it took me a year. I'm not going to lie and say that I picked it up immediately. I wish I did. I thought I was going to. I thought I'd be flipping houses in a couple months, make my money back and be killing it. Not the case. Literally drinking from a fire hose, trying to figure out what the heck I was doing. And, it took me about, I think, 9 months before I got my first deal, longer than a lot of people. And it was a terrible deal. I made like $2,000 on it, but that was my transition into the business. And it took me, about a year to get my bearings, went full time 2015. Fast forward now, I've grown a pretty good sized team. I I coupled a brokerage. I have me and 12 agents on my brokerage team, which I started just because I was excelling in my flips so quickly and I needed support to sell these. So now on average, I have anywhere from like 9 to 15 flips at a time that I'm working on. And then I'm also moving more into new construction. I finished up my first 6-unit townhouse development a couple months ago.
Nice. How'd that go?
It was I'm gonna say that I've now paid for a doctorate in townhouse building, is what I'm gonna say. A lot of lessons learned on that. I'll say that. The biggest thing out of it is really making sure you have the right contractor, which is the same in flips. You know what I mean? So it was a little bit bumpy, but we got it done, and I learned so much from it that now I feel a lot more confident in any other townhouse builds that I get into, as long as you don't get into like really crazy circumstances. So
Nice.
yeah, it was fun. So now I'm moving more into new construction too, though. So yeah, I grew pretty quickly, and it's pretty fun where I'm at now.
Yeah, I think, what was it? It had to have been like 2016, 2017 when we did that. Monty was there, so it was 2019. It was in 2019 then.
Yeah, that sounds about
Yeah, it
right.
seems like it was longer than that. But anyway, yeah, it's 2019. But dude, you have just, your growth is impressive. I had a guy a couple weeks ago, Pat Flynn, on there, and his growth was impressive too. And it's really cool to see guys like you just that have hustle and grind to take off with it. So just figure it out as you go.
Yeah.
So are the agents in your office, are they also agents for retail people as well?
Yeah. So I'm a bit selective about who I bring on. Like, I really want to make sure that we have agents that invest too, because that's important for me. Like, the agents that I do find and that do want to join my team typically want to do some kind of investing, right? Because that's where I can obviously add the most value. I don't have like a big traditional brokerage where we just work with tons of buyers. A lot of our stuff is geared towards investors. So most of the buyers that my team has are people that are looking for like house hack opportunities, rentals, multifamily, value add opportunities. We do, an okay amount of like just the regular retail side, just like what our agents get on just, their referral network, just friends and family and that kind of thing. But really, we focus pretty heavily on the investing. I partner with, a bunch of the agents on my team. They love me because I'm the easiest buyer they have. So I got hungry guys, man, which has helped me a lot, which is why right now I have more active flips than I have, like, I think ever, like, currently under construction. And it's because they're pushed me too.
Yeah.
I got like all these guys who want to do deals.
That's the crazy thing with employees, right? Is once you start getting these employees, it's like you have to level up your game to keep them fed. And it's like, and that's the hard part, is it's like, ugh. I mean, it's stressful because it gets you outside of your comfort zone. And as we were talking about a little bit earlier with Greg pressing us, right? It's he has pushed us so far out of our comfort zone, my wife and I. It's because he's just like, we've got a deal, we got this thing going, let's go, right? And it's just like, oh, so
like, okay, we'll figure it out. You're a little bit stressed out, got some sweaty palms, but I think we're gonna be okay.
Yeah, luckily we like feel confident in him, like saying, okay, we can do it, because he's done it before, right? And he's doing it currently. So how much did your team do last year in like sales volume?
We did right around 80 million last year.
Nice.
And yeah, it's pretty good. I did, I think 46, something like that. So I did a good chunk of that.
Nice.
But we're really starting to grow, which is cool, because I've had a couple of agents who started with me really early on. And it's fun to see people start to get their bearings and get traction in this business, right? Because you can really start seeing people grow, which makes it way more fun across the board. So like this year, our goal is 200 million. Everyone about crapped their pants when I said that. They're like, what do you mean 200 million? Like we did 80 last year. Like, what are you talking about? And I was like, yeah, are you scared? Because I am too. So I'm going to try and carry a big chunk of that, but I need you guys to like really step up. So, will we hit it? I hope so. I think I've already had people change their goals, because we check in just once a month really quick on like our general goals for the team. And I had, 3 agents after the first month and a half be like, hey, you need to change your goals because you're already undercutting yourself. So push that a little bit harder. They're like, do I have to? Yes, you do have to. Like, change
awesome.
It, double it. Let's go.
So you're basically similar to like what Caliber did, right? before Caliber got bought out by Compass, the agents where they're like kind of investor friendly, like you want to kind of be in that niche kind of thing, but the agents want to work in that market, correct?
Yeah, that's pretty accurate, and I think the biggest thing that we push for is the value add opportunity of working with us, right? Same thing like with Caliber. I don't know if they offered like minor renovations for their clients, but that's something that we offer too. Be like, hey, look, if you buy with us, we'll do a light remodel for you. Nothing super extensive. You got like a bathroom or a kitchen, something basic, we can do that for you. And then obviously we get so many off-market deals sent to us. That's another value add. We just sold a client a really, really cool house in West Seattle that I wanted to buy, but it was too tight for me. So I said, hey, this fits a lot of what you guys are looking for. And, it was just one of those situations where it made sense. They bought it. And then I'm actually doing a renovation on the house for them. Really rare for me to do this size, but it was a deal that I just wanted so bad that I wanted
to do the rehab. So you feel like you're involved in it somehow, like you actually flipped it.
Exactly. It was just such a cool mid-century modern house that I was like, I'll renovate this for you guys. I was like, let's just do this deal.
That's awesome. So are you under Compass?
Yes.
Okay, so Compass has that program, right? They're the ones that have that program, right?
Yeah, but that's just for sellers.
Just for sellers, okay.
Yeah, so that obviously we do too, and that's another big value add. So like you can use this concierge program, which is essentially 5% of the sale price you can get as a 0% loan. So $1 million, you can have up to 50 grand, and then use that with my network and the team's network of contractors and everything, and our wholesale pricing. That 50 grand is probably closer to like 100 grand to a retail client, so it goes a long ways. So one thing I'm working on this year is I'm trying to push a little bit more on the retail side of things to help my team grow, because I can only do so much. And as we grow, we want to start adding more value to, other agents, or other sellers and buyers and stuff we work with too.
So, okay. So you got your agent team. What is your team like? You said you're carrying the most flips ever right now. How many do you have right now?
Well, I have the most
active projects or whatever
under construction. Typically I'll have before this year, I was hovering like 9 to 12 was really, really common for me. And for probably the last 3 years, because once I got over that, it would just get a little too hectic, starting to be, a little bit leverage more than I'm comfortable with. Right now, I have 15 that are actively under construction. So it's just, we got really front loaded at the beginning of the year, and my projects have gotten really extensive too. So my price points have doubled from what I used to do. And then the project size has doubled as well. So it's just the carrying costs are a lot longer. The hold time is a lot longer. So, it's good. I'm flexing my risk muscle, we'll say.
Yeah. So what are you doing for marketing to get your deals?
A little bit of everything. I still like to have fun with marketing. I do direct mail pretty consistently still. I partner with one of the agents on my team. He spent about 3 years building his own custom driving for dollars list. So That has been like gold for us. I've gotten some really good deals. I got a commercial
all the time. Driving for dollars is the best freaking list.
It is.
Driving for dollars and stack on tax delinquents on top of it. Best list ever.
Yeah, absolutely. And we've had good success with that. And then honestly, I got a lot of deals this year off the MLS because I have a bunch of hungry agents who are on it, and I've taught them well how to analyze deals, and I can make a really quick decision. So, they're looking at probably, as the team, I would say as many as 50 to 150 houses a week, because we have several that are actively looking. So I've had actually good luck on the MLS this year.
Is that because you're moving up in price point though, as well? Because you can basically go pay retail or just slightly below retail for a house, because you can do, add an addition, or you're doing such a high-end rehab that you can add. You spend $200 a square foot, but it'll sell for $400 a square foot kind of stuff.
Yeah, that's exactly right. The projects that I have been buying have been $250,000 to $300,000 renovations. I have 2 projects that we're adding 2 dormers, a double dormer on one side. So
what's a dormer for people that don't know?
A dormer is a second story addition, basically finishing attic space. So you see those little bump outs on second stories where you have, it kind of comes out off the house, and you usually have a window in the middle. So that's a dormer. So it's essentially doing kind of a shed roof, bringing it out to the end of the house, and then bringing it straight down in line with the end of the house. So, and it's a really awesome thing to do, but it's expensive. And, these older homes that I deal with too, when we're fully gutting the house and reconfiguring the layout and then doing these double dormers, it just adds like a whole other layer to things and really extends my holding time. But because I'm doing this much work, like you said, I can pay maybe not full retail, but I can definitely pay more. And when you get these other investors out there that are looking at not doing as much work, there's a lot fewer people doing these really extensive renovations like I'm doing than there are doing those quick, easy, just, lower end, not lower end, but like median price point flips where you're not doing these, extensive renovations.
Yeah, like it's really hard to find a 3-2 ranch in Tacoma for a flip on the MLS. Like you would never find that, right? You wouldn't even find a rental basically because you just can't do enough to make it worth it, right?
Yeah, one of my team members in the office, he just threw his phone down and looked up because he's hunting hard for a rental for someone for that and a flip for himself, and it's way harder to find those price points, something that's kind of a quick, easy deal. And the ones that look good, once you get out there, there's a reason they're priced the way they are. They're really wonky or they're terrible or the location's sketchy. So yeah, those are much harder to find on the MLS.
Yeah, tell your guy to start cold calling and driving for dollars.
100%. Well, he's the one with the driving for dollars list.
Oh, nice. Hey, I need to hire somebody to go drive for dollars for me in Vancouver again. Does he want to go do that?
I highly doubt it. That's pretty deep, man. That's pretty.
I pay $15 an hour. It's a really good wage.
Oh,
yeah. I mean,
I think he just gave me the middle finger. So.
I think he's on his way down right now, isn't he?
Oh, yeah.
All right. So now those higher end flips, those also carry a risk because holding times are longer. You're what, 12 to 15 months?
No, we're like 9 to 12.
Okay. So you still got 9 to 12. That's still a long holding time, but also like the market changes in certain areas, right? Like the east side is what's on fire in Seattle. So explain Seattle to people that maybe are listening that don't understand the three counties and kind of how that works.
Okay. Yeah. So I mostly work in Seattle. So you have the east side, which, like you said, I wish I could get stuff over there. I never spent my time looking, which is why I don't really get stuff. But the east side is kind of a phenomenon right now. Things are selling, 10 to 50% over asking sometimes. It's absolutely crazy. And it's just because I think you have a lot of the tech industry in Seattle, which is growing a lot. And the east side is much more of that suburban, safer, quieter neighborhoods, the Bellevue, Issaquah, Redmond, Kirkland, kind of all of those places hugging along, I-5 on the other side of the water. So people are willing to just pay crazy prices over there. But Seattle is still really strong. Our market on this side is still great. I just sold a house $50K over asking that was on a busy street. And for me, it was a very average renovation, but we still got 3 offers and sold 50 grand over asking, which it's hilarious. We're so jaded that I'm like, yeah, it's okay. I mean, it's not 150 over asking.
This is what I always say to people, like, we've had it so good. We don't know any different, right? I mean, if something doesn't go pending,
I know different. Hold on. I've been through some other times. Okay. I know some different.
Which time? You had 2018, you had 1 6-month period.
Exactly. It was like a year. Okay. It was a year where I was stressed out and sweating bullets. So I've been through at least one. All right.
All right. Well, let's get to that here in a minute. I want to talk about that in a minute.
Yeah. But Seattle's still really strong. So it's a good area to for sure invest in. I typically stay to all the kind of the core areas. You're still seeing houses sell over asking really consistently. It's all about pricing, just like everywhere else, right? You price it right and you have good product and a good location, then you're still going to be getting those crazy offers. That's going to be, Seattle, King County, this area. And it's pretty consistent. Honestly, like our market is consistently selling quickly over asking pretty much anywhere. I mean, Pierce County and Tacoma, it's the same way. It really is. Like further south of the city, you're still getting a lot of that activity.
So just for people's reference, I know I was talking to Greg. Snohomish has what? Bounces between 0.2 and 0.4 months of inventory, Snohomish County.
Honestly, I don't even watch Snohomish. Sounds believable.
Yeah. So Snohomish, I know King, Kirkland area is very similar. Are you guys in the similar boat?
Yeah, we're the same. There's very little inventory.
And so I was actually talking to Greg this weekend, and he was saying that you're actually going to have a lot more issues in the next 8 to 12 months. The concrete drivers are on strike.
They have
for 5 months. 5 months. They can't get concrete. And if they are getting concrete, it's from some scab driver and you're paying like 5x as much.
kind of, yeah, which I'm glad I'm not doing tons of new construction right now. So that's a plus.
So, but what that's going to do is it's going to kill the supply in like 8 months. You know, it's already supposed to be built out, and then nobody's going to want to sell because they've already refied their interest rate. It's not going to be any lower, so they're not going to want to sell. So you're going to have nothing.
Yeah.
You have like one house on the market.
It's great for me when I got, 15 coming online in the next few months. So
Yeah,
that's good news for me.
Yeah, that's the, we used to carry a decent amount like that entry level stuff in Vancouver with my partner Corey, and it always felt good coming into the spring carrying a bunch of houses. You were stressed all winter, but it feels so good when the market just goes on fire.
Yeah. Yeah. But it's still stressful a little bit, right? Especially when you carry these a lot longer than you originally planned. So it'll be interesting though, right? As long as interest rates don't take a crazy spike, which they're kind of starting to trend a little upward right now, I think we'll be good for a bit longer.
So let's dive into, you made a comment about 28, you went through a bad rough patch. We didn't see it as much because for whatever reason, it just happened to be lower price points in Vancouver. We're 2.5 hours south of you guys there, and then we're also in Tri-City. So we didn't see it as much, but I know Seattle lost like 60,000 off median home prices values in like 6 months.
I would say that's pretty believable. I don't know off the top of my head, but I remember seeing graphs where it was a staggering like drop when it had happened. And it was just this crazy trifecta of everything. And we had the stock market just took a total huge hit. And then interest rates went up at the same time. And you had buyer fatigue weighing on people. So it was this like these three huge things that all hit at the same time. And for me, it was another time where I was leveraged pretty high. I had 12 houses at that time, 11 or 12, I think. And this was much earlier on in my career where, I was at the point to where I felt like I couldn't miss. I was scaling my business. I didn't have a really, really solid core team. And honestly, I hadn't learned enough lessons for me to kind of be at that level. You know what I'm saying? So I had, I think it was 12 houses for sale at that time. Nothing was selling, not one single house. And they were all listed. You want to talk about a stressful time in my life, man. I was paying, 35 grand a month and holding costs. And I was paying out of my own pocket at this time. I'm seeing my bank account going down by chunks each month. And I'm like, okay, this is starting to be a little bit stressful. And slowly the houses started to go pending, right? Which was good. But we went from having a market kind of like we are now to where things were just going. They were just going, right? As soon as you list it, they would sell. But then nothing was selling. And so I really had to start being like, okay, what am I going to do if I can't sell these houses? And, luckily they started to go, but I lost money for the first time ever. I lost money on 3 houses, I think, that year, which are the only 3 I've ever lost money on. And those were the 3 biggest learning lessons I had, like, why did I lose money? What did I do wrong in these situations? And my biggest takeaways from that time are a few things. Number one, hiring, again, the right contractor. And I said that at the very beginning of this is so important, especially when you get really busy and you can't really keep a super close eye on these projects. I hired a contractor who said, oh, I can do everything. I can do everything. Okay, cool. A lot of red flags through the process, but I was so busy that I was just running. And I kept turning a blind eye and being like, he'll figure it out. He made some really, really stupid mistakes and lost me a buyer when I went pending, when I really needed this house to sell. Lost a buyer. And then I kept sitting on the market, and then I kept having to drop the price. I lost a ton of money on that one house. I lost 80 grand on one house. Yeah, not fun. So that sucked a lot. And then contractor, number one, if I would have had a good GC in there, he would have done everything well. And the other thing that I do now that I should have done then is I do pre-inspections on all my houses. I'm essentially selling as close to a new construction project as you can have, right? Without being fully ground up. And so I warranty everything. And if I would have done that, we would have caught all these little issues, gotcha. Right? So doing a pre-inspection. And then the other one that hit me on the other couple of houses was just location. So, having a house in the right location is so important. And I had 2 houses in kind of weird areas. There was like one that was on a busier street. And then the other one was kind of an anomaly in Kirkland. It was at a dead end street, but there was just like some little quirks with the house. And, those were 3 that just wouldn't sell. They just wouldn't sell. So I had to keep dropping the price. I didn't lose as much on those 2, but it was enough to count and make me sit back and be like, okay, what happened on these deals and how can I fix that going forward? So I changed my buying criteria after that pretty dramatically. I used to just have, a minimum of 70K I need to make on a deal, and then I'll just do pretty much any deal. The price point didn't matter as much. And I was just like, okay, let's just go. And I was buying as much as I could. And I wasn't as thoughtful when I would look at the comps and everything. Oh, it's within half a mile. We're fine. You know what I mean?
Instead of knowing there's a value line from this street to the next street.
Yes. Yeah. There's a lot of micro markets, and when you get into higher end homes, you have to know these details. And so after that, I changed my buying criteria, especially because I couldn't risk being in worse locations. The layout was something else that I really figured out on these. And then now I won't buy anything that I can't absorb at least a 10% hit on the sale price.
Gotcha.
So if I'm selling a house for 1.7 million, I need to be able to absorb 170 grand if something crazy happens.
And still make money, hopefully. And yeah.
Exactly.
Now, are you factoring in like longer hold times and things like that as well, and increased like rehab costs? Like say you had a $400,000 budget, but you're bumping it. How much are you bumping that, to have buffer in there?
Yeah. So it's just kind of everything all the way through, right? You have to just add that extra cushion. The hold times was, yes, definitely one. I used to just put 6 months for everything, right? Now my bigger projects, 9 to 12 months. So increase the holding times on those. The renovation budgets, you just have to continuously update. I mean, our market changes on a freaking daily basis at this point with everything.
It's so crazy, dude. It's like, I don't even know how you, like, we're buying these multifamily things. It's like, I don't even know how you put a budget in there. I mean, we have 31 units that we need to get windows for. Are we going to be able to get those? Yeah. It's just siding. How much is siding going to cost? Same with like these new construction builders. Like I've heard, $50,000 to $100,000 just on one house in lumber.
Yeah. Yeah. My lumber order for a project right now is double what it was 3 months ago. 26,000 to 52 is basically where we're at. So right about double. So, and it's just something that's why it's so important to buy conservatively at the beginning, because you don't know what's going to happen. And if you can't absorb these costs kind of throughout it, that, and then having enough cash reserves kind of across the board to be able to like carry these projects if they do go long, that's the type of stuff that it didn't keep me from growing my business, obviously, but it made me a lot more conservative, which is good. And, I think it helped my business for sure, because I learned so much from those deals. Like you got to take a loss somewhere at some point to really be able to learn kind of what you got to roll through, I guess.
All right. So how much do you think you lost, like on the 3 houses, you lost 80K on the one house? How you had extra holding costs that were costing you $35,000 a month. How much do you think you lost, that you weren't planning on obviously losing?
Yeah. I'm going to reframe that to what did I invest in my continuing education?
Yeah. Okay. Yeah.
So honestly, I never calculated the holding costs, but it was right around 200,000 that me and a couple investors lost. I ate a very large portion of that. And then, I mean, the holding costs again at 35,000 a month. And I held most of those for almost a year. I mean, maybe another 200 grand, something along those lines.
Yeah. If you're planning for 6 months. So now, did you have private lenders on there? Who did you have on most of those loans?
So I had hard money loans. They were hard money loans on all of them. And then I partnered with, private investors. So they do like the gap funding and cover the down payment. And then, once I use their money, then it's on me. I didn't go back to even one investor and ask for more money. I was just like, you know what, I'm the one that blew this. So I just was covering everything. And they did take losses with me in proportion to what our kind of profit sharing agreement is. So I still ate most of the loss on all 3 of those deals. So yeah, I was looking at the time, I was so excited when I listed everything. I think I was looking at making like $1 million if I sold everything.
Yeah.
And I was like, oh, so excited. It's like, I'm going to kill it right now. This will be the more money than I've ever made in my life. And then, somebody upstairs was like, no, kid, you got some more to learn, right? Us and everybody else. But also in hindsight, it was one of those things that like kind of had to happen. We were getting so saturated in this this flipping world that everyone who had a couple bucks, every doctor with a bank account or Amazon employee cash out their stocks, whatever, started getting into flipping, and they were screwing the market up. You know what I mean? Like they were delivering bad products and they were pushing the price points up. I remember a couple situations where I was like, I would talk to some investors who are new. Hey, what do you think I should list this for? Honestly, I would list it at X. They listed 100,000 higher with no justification. And then they would sit on the market for months and months and months and be like, why can't we sell this? And you listed 100,000 too high. Right. So, and it weeded a lot of people out at that time also.
Yeah. Yeah. Crazy time. So how does the market look today in relativeness to that time pre the 2018 hit?
I'd say in terms of like the inventory and everything, it's pretty similar just because we have barely any inventory. There's a couple of things that are like similar that are a little bit stressful. We have these interest rates slowly starting to creep up a little bit, right? And then we have this crazy stuff going on in the world with Russia and Ukraine. So what's wild with this business is you never know what's going to happen. The stock market is taking a hit right now too. Everything's kind of going down, so it's like, that's why I'm really happy that I bought everything now so much more conservatively with this new criteria. If I do have to fire sale stuff, I can do it and I'll still be okay.
Yeah. Why don't we talk a little bit about that? Because I think Seattle is a good market. I think Tri-Cities is a little bit more insulated just because the price point, same in Vancouver. Why don't you talk a little bit about like you labeled off three things, right? Interest rates are creeping up. They actually creep back down a little bit the last couple of weeks, but they're going up. They hit the fours for a short time.
Which is still ridiculously low.
Yeah, it's still ridiculously low, but it still is an affordability issue because prices are so much higher than they were when they were, before, right? So it's still like now it makes a huge difference on the $1 million home instead of a $500,000 home 12, 15 years ago. So you have that. You have oil shortage. Gas prices are going to go through the roof. You're having shortage issues with all your products and materials. Stock market's again taking the shitter today. Oil almost hit 130. Ukraine and Russia. Now China's getting in the mix. I mean, what are your thoughts and what are your outlooks? Are you shifting anything you're doing on your buying right now? Are you being even more conservative? Are you sticking to just super core areas like Queen Anne or really nice areas? What's your thought process going forward for the next 6 months?
Good question. And I think that I'm definitely maybe a little more conservative than before. The properties that I've purchased recently, again, I make sure that they're in really good areas. If they're not in an area that I know is, maybe not an A+ neighborhood, but at least B+A areas, then I'm definitely not willing to compromise my numbers. I have to still be able to absorb that 10% hit on there because otherwise it's just too risky for me with everything that's going on. And then outside of that, I'm not pushing to buy anything right now. So like I have full inventory on all of these numbers that I bought before, but always looking, a quarter ahead at least is kind of what I try to do just to kind of see, okay, well, when I finish these, what's everything going to be looking at like, and then just making sure to really stay on the conservative side. And like you said, trying to stay in the core areas. When I start getting into the outskirts and like weird areas that I don't know, my buying criteria just gets tighter and tighter because I'm just not willing to risk it. And I got picky, you know what I mean? I have the right to be picky now, and I'm not going to compromise my criteria just to get a deal because I don't need one that bad.
Yeah, we always call it, we don't press, right? Like we just don't press. We don't need a deal. Don't have to work right now. I don't have to buy anything. You probably don't either. And so it's just like, why put yourself at the risk, right?
Yeah.
So what are you doing like for long-term wealth? So you're doing a lot of little things, all this stuff for the new construction, the flips, the high-end renovations, the brokerage for like active income. Are you doing anything more for long-term wealth building?
Yeah. So I've kept a handful of my flips, kind of the ones that I've liked the most or had the most potential. So I definitely have kept some of my nicer houses, and I like keeping really nice houses. So they're completely renovated. I can have better quality tenants, which I like. So I can charge a premium for my houses, which is cool. The flip side of that, they expect a premium house. So I get a little bit of extra phone calls to deal with things.
Oh, yeah.
But I would still rather that, honestly, than someone beat the crap out of my house and I find out about it later. So I get really good tenants who want the house taken care of well, which is cool. And then this year, I'm starting to look more at commercial stuff. You and I talked about this, briefly. I really want to start looking for something that would be like a kind of a smaller strip mall somewhere. And I want to stay closer to home. I don't want to venture out into other states and go really far away. So I want to start looking for something a little bit smaller commercial. And then the most recent thing that I have, which is pretty cool, is that commercial piece of property I bought last year that we're going to build. We're doing feasibility on it right now. Originally, it was going to be either a 7 or 8 story apartment building with like 65 or so units, and then mixed use on the bottom 2 floors. So like having like quick food service, like Evergreen, Subway, Starbucks, like sandwich shops, that kind of thing. And that's one that we pivoted. And now we're looking at doing like a self-storage building and then having like work offices in it. Yep. With still having the bottom 2 floors be mixed use for like food and that kind of thing. And that's what we're going to build and keep. So for me, that's like huge. Legacy. Yeah.
That's a legacy build. Yeah, and I was listening to a podcast the other day. It's actually a really good one. It's like this this Texas investor. This guy he's on Twitter, raised a ton of money from building his list on Twitter, right? And they're in self-storage, and they're talking about these numbers, and it's just freaking astronomical. Like they're buying value add stuff, but it's not even value add. It's just like put better systems in place and double the rent because these old people haven't raised the rent for 20 years. But like I know a ton of people are going into that because what they said was everybody bought a ton of shit in the last 2 years. They didn't have anything better to do, right? Yeah. You know, Amazon sold a ton of stuff to people, and it's like, oh, what are we going to do with all this now, right?
Exactly.
So.
That, and then our location. So there's a few reasons we pivoted. So we bought this in an area that there's probably about 600 or more apartments coming online in the next few years that are already under construction. Our location is not the greatest. It's not like a terrible location, but it's definitely more of a high traffic area. So we were already going to have to basically keep our rents at something that's pretty affordable for people. So that was one big thing that we looked at. The other one is honestly just the risk involved with building, a 7 or 8 story apartment building compared to building work lofts and storage units. You got concrete and walls, you know what I mean? And then on the storage units, they're really, really basic to set them up compared to 65 toilets and 65 kitchens. And you know what I mean? So it makes it a lot less risky. And also that the money involved and needed to do this deal goes down by probably like 25% also. So for us, and then the cash flow should at least be equal, maybe even a little bit more depending on, where everything is when we finish.
Nice. That's awesome. Now, on the residential, if you're going to build the 7, 8 story, would you had to go like wood? Could you go wood for like 4 stories? I don't know. Like, and then you had to do like steel above it. Is that an issue?
The first 2 would have been concrete, and then we would have done wood above that.
Okay.
We're relooking at it now because building a work loft and storage unit building, it's kind of a different ball game. It has to be a lot stronger. It has to be able to withstand, I want to say it's like 65 pounds per square foot, as opposed to residential is just 40 pounds per square foot. So it changes what we have to do. Everything else could have been stick frame on the other building, but now we're going to have to most likely do pan decking and concrete floors. So there's kind of this trade-off in terms of, construction costs. But again, like I said, you can beat the heck out of a building that has concrete floors and drywall in the 2 floors that have work lofts, and everything else is just metal walls that go in that can come apart easily. So
set it and forget it, fill it and forget it, and then have somebody manage it.
Yep. So that's kind of our thought process and why we shift over that. And like you said, I feel like storage units have become something that's been a lot more popular lately. I'm starting to see it, a fair amount more. So we definitely still have due diligence we need to do on it and really work through it the right way. But it's a pretty exciting project. Another one that gets my palms a little sweaty. But you got to push those comfort zones, right?
I know. I'm working on this. I'm trying to put this deal together. It's a comp plan change, but I've already talked to the city manager. I've lobbied my side, and like we'll get the change. I think I'm 99% sure, but like that gets my palms sweaty because I'm like, the guy the broker, I'm buddies with the guy that owns the brokerage, and I'm like, hey, I'm gonna be making the offer with your broker. He's like, just put a good word in for me. So he called the guy. He's like, hey, is Elliot good for this? And he's like, yeah, he's good. And I'm thinking like, dude, this is like 10x the size of anything I've done.
Yeah. You're like, just fake it till you make it, man. Let's go.
Yeah, exactly. So what would you say your biggest key to your success? Because from what I hear and what I think what I said in 2019 as well, which I was definitely wrong, was you have a lot of different things going. So you have a lot of different buckets. So you have your flip side, your new construction side. Now you're at a commercial, but you got your agents, and you're doing a lot of different things. Like, how have you structured your team and yourself to be successful?
Ooh, good question. Doing it, I think one thing at a time more than anything else, refining that first thing. And before I take on 10 other things, make sure that I have this one item moving smoothly. Right. So I didn't start growing my brokerage team until I felt like I had my flips going pretty smoothly. I don't take on more than I can chew. So I would say, as I've started to expand, it's really important that I get these good systems in place, or I feel really, really comfortable in what I'm doing before I can start looking at something else. So I'll give an example. Right now, I'm actively looking for a new project manager. I've narrowed it down to two people who both are pretty qualified, and I'm going to make that decision in about the next few weeks. And once I can bring them on, get them trained up, they're going to be able to take a lot of my daily activities away, because right now I spend a lot of time project managing.
Oh, you're running the flips.
I'm running a lot of them. Yeah.
Gotcha.
Yeah. Because there's just too many details, right? And so I have to keep an eye on these. I have an assistant right now who helps me a huge amount, but he was brought on to be my assistant, not a project manager. So he's already like kind of over his head. I've thrown him into the frying pan so many times and he has no idea what he's doing or looking at, which is how you learn, which is good.
Yeah.
But I would say making sure that I'm really comfortable before I start to expand. So once I get this new project manager in, then I can spend a little bit more time really kind of coaching my team and helping them grow on the agent side to help us get that 200 million. And then I'm going to be able to start focusing more on commercial. So like when I set my goals for the year, Q1 was really heavy on getting this renovation stuff figured out, hiring the new PM. I want to have a new PM hired by Q2. Once I get them trained up within about a month, then I can start kind of spending my time looking for what's next, right? Because as the business owner and the entrepreneur, if I get caught up in this daily stuff, I'm going to be just on that hamster wheel, right? People want to get out of the 9 to 5, but I will be running on 6 hamster wheels if I'm doing everything.
Exactly. So here's a question though. So you said you're going to pivot into commercial or whatever. Why not just go deeper into the things you're already going and doing? Like you started doing new construction on the townhouses. Why not go deeper in new construction? Or why not just go, instead of carrying 15 flips, carry 30 flips and just hire that out, or like build your brokerage from 12 people to 40 people? Like, what's your thought process there?
So I would say my business has grown pretty fast in the time that I've been doing this. So
very well.
Yeah. In 6 years, I've gotten it to this place that I'm pretty happy with. When I tried to push it and I really tried to take on more and more and more flips was 2018. I did 30 that year, a little more than 30 that year, and I got my ass kicked. You know what I mean? So the way I look at it now is I would rather do higher price point homes, bigger projects, less projects, and have more fun doing them. When I was doing that many, I was just crazy busy and they weren't as fun for me. Now I do these big projects and I get to have more fun and I get to go through and like, ooh, let's make these changes. And I get more excited about it. So, because I thought about, okay, I can just keep on pushing the flips, but it's harder to keep your eye on the ball when you have that many. So that's why I'm like, let's just expand. I can comfortably do 15 at a time right now. I get a new project manager in who has a great eye for detail. I can really train well. They can watch that and it can be their baby. I can still watch from a distance. Now I can start to expand in new construction. My goal is to have 6 to 10 new construction going at all times. I can slowly start to build that up. It's not a race. This is a marathon.
Yeah.
You know what I mean? So I'll keep slowly pushing the new construction side. And then as that's slowly growing, because that's a much slower business model, You know what I mean? So that one's a little slower as that's kind of getting off the ground. Now I can start just slowly looking down kind of the commercial avenue of things. I have a lot to learn on the commercial side, so I'm not trying to just go all in on it. But I know that commercial is where you can do some real serious, big wealth building.
Add zeros. Yeah. Add a lot of zeros, right?
Exactly. There's a reason, you stopped doing as many flips and you're, more into your multifamily and apartments, because it's like kind of the same process in a way, but just like taking those blinders off and like, okay, well, what does this part of the industry look like?
I like learning new stuff. And so I think I'm with you on I get bored really, really freaking easy. And so it's like flips. Okay. They're boring. I don't want to do high end flips. I don't really have the market for it really, and I don't have the eye for it. My wife does, but I don't give a shit. But like, what do they? I like the saying is like, when you owe the bank $1 million, it's your problem. When you owe them $100 million, it's their problem. And so like, how do I get to that point where it's their problem, right? And it's amazing. I've talked about this before. Is like when we got our first loan for that first that 25 unit last year, Freddie Fannie, and all they wanted was like our PFS, our personal financial statement. And then like, they didn't care about where the money came from or anything. They're just like, great, thank you. And I'm like, do you want to check anything? And we're like, this is the easiest freaking thing ever. Like, what are we doing? like, yeah. So I think it just gets easier the farther upstream you go. That you got to go through the 2018 hurdles, right? You got to get your ass kicked. And a lot of people don't keep coming back.
Yeah. Yeah. They get hit and then they move on. So yeah, like you, it's fun to just explore these new avenues. And like you're saying, when you get into these bigger deals also, it's like, it is more asset based at that point. And then once you get a track record again, just like anything else, it gets even easier. So like, I finally have gotten relationships with the local banks who are willing to fund my new construction now, because I've done a couple, and now I can get conventional rates for my new construction loans, right? And then when I do one with them, then they'll want to give me more money. And I'm already talking to them about funding my mixed use building, which will be, $10 to $14 million at that time. And they said, well, let's just get these couple deals done. And then when that comes up, we'll talk about that. Yep. And when you get that at half the rates you're normally paying with hard money, I mean, that right there is a game changer as well.
Yeah. The second one we did last year, we did bridge debt with Trust. And so at first they weren't like giving us that, they're kind of not really answering our calls all the time. Like, we got it done. And then I sent them a nice Christmas gift. The most underutilized marketing technique is good quality gifts that are like customized. Like people miss that all the time. But literally now they answer the first ring. My phone call's answered, first or second ring. With the next loan, they're like, yeah, no problem. Let's get it done. And your rate's 3.75%, and you get a rehab loan in there. Yeah. And it's like, yeah, I mean, obviously we still have to bring equity in, like 20% equity in, but it's like, I mean, how great is that? Like,
that's pretty great. And are those non-recourse also?
No, those are recourse on those front end.
They're getting you then. Okay.
They're getting us, yeah. Yeah, I think so. I should know that. I probably should know that. Answer that question. I know that Freddie Fannie's non-recourse when you go to them, but then they have all the bad boy carve outs too, though. So they're going to still try to get you one way or another, probably. Awesome, man. Well, I think you are super impressive. There's a couple of guys in this business that I just hold to high regard that are hustlers. I think you, Jimmy Daynard, Greg Lynch, guys that just put their heads down, grind. They're not, trying to be anybody they're not. And so I'm super impressed with your growth and just who you are as a person as well. So I think it's pretty cool. So hopefully I know.
Too bad you're not closer over to the Seattle area. We'd see each other a little more.
I know. So awesome, man. Well, thanks so much for coming on the show. And where can people find out more about you? You do a good job on Instagram.
Yeah, if you want to follow me on Instagram, Jared Flip Seattle is my handle on that. I post a fair amount of like property walkthroughs and just kind of fun stuff that I'm working on. If you just want to reach out to me and connect, I mean, I got a few websites, JH1 Homes, Jared Buys Houses, the JH1 team. I mean, I'm super easy to find. Just Google Jared Holland Seattle and I'll pop up. So yeah, I'm always looking to connect with new people.
Cool. Awesome, man. Thanks so much.
All right. Thanks a lot, Elliot.
Yeah.